Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, October 16th, 2024. Hope you're having a fantastical day out there in the interwebs. A lot of green here domestically, so evidently the markets are in a good mood today. So I guess that's a good thing. Hope you're having a fantastical day. It is beautiful here in Colorado. It's getting a little chillier, and we're expecting a storm this weekend, which is not ideal. So anyways, all right. Well, before we jump into the numbers, if you, yes, you could do me a favor, give me some thumbs up, a like, share, subscribe, and follow, and press that notification bell. All righty, let's go ahead and get into the numbers. Dow Jones was up 0.79%, 337 points, closed at 43,077. S&P 500 up 0.47%, 27 points, closed at 5842. NASDAQ up 0.28%, 50 points, closed at 18,366. The VIX was down 5.14% today. It's at 1958. Canada up 0.5%. Brazil up, where'd it go? 0.54%, and Mexico up 0.2%. In Europe, Germany was down 0.27%, the UK up 0.97%, France down 0.4%, Netherlands down 0.74%, Spain up 0.56%, Italy up 0.24%, Switzerland down 0.2%, and Portugal up 0.78%. Russian exchanges both red today. The MOEX down 0.85%, RTSI down 1.1%. And the overnights, mostly red. The Nikkei in Japan was down 1.87%. Australia down 0.41%. New Zealand down 1.65%. In China, the Shanghai was up 0.05%. The Shenzhen component down 1.01%. China A50 down 0.53%. DJ Shanghai down 0.01%. Hang Seng down 0.16%. And the Taiwan weighted down 1.21%. All right. So Asian markets, Europe, and then America was much better, or the Americas. All righty, well, let's hop into the market recap and see what actually happened. U.S. stocks higher as chip stocks steady. Banks continue to roll out earnings. U.S. stocks largely rebounded on Wednesday, recovering from the prior day's slump as chip stocks stabilized and Wall Street continued to digest third quarter earnings reports. Notably, Morgan Stanley surged over 6% after beating profit estimates, capping a strong earnings season for banks. This followed similarly positive results from Goldman Sachs, Citigroup, and Bank of America, all of which reported strong investment banking performances. In other sectors, Abbott Laboratories gained 2% after raising its annual profit forecast, driven by robust sales of medical devices, particularly in glucose monitoring products. United Airlines saw a significant 14% rise after exceeding earnings expectations and announcing a $1.5 billion share buyback program, boosting investor confidence. However, tech stocks face challenges despite a partial recovery in chip stocks, which had been hit hard following ASML's lowered 2025 sales forecast. Microsoft and Apple struggled, dragging down the broader tech sector. ASML itself fell over 5% as concerns about declining demand for AI-related chips persisted. The chip sector was further rattled by reports that the U.S. government might restrict AI chip sales to certain countries, potentially impacting future revenue. Novavax faced a sharp decline, plunging over 19% after the FDA paused trials for its experimental COVID-flu vaccine combo. Ooh, that sounds delicious. This setback raised concerns about the company's future product offerings amid an increasingly competitive vaccine landscape. Overall, while the financial sector buoyed market sentiment, tech stocks remained a drag, and specific sectors like biotech faced regulatory headwinds, underscoring mixed investor sentiment. All right, well, the way to avoid needing to take vaccines is take care of yourself. Get vitamin D, sunlight, exercise. Don't eat stuff that comes out of a box. So that'll probably help you out, and then everything else will probably fall into place. All right, next up, got an article from Zero Hedge. It's titled, "Probably Worse Than It Looks. IMF Sounds Alarm Over Government Spending." Shocking. People are worried about overspending governments now. The International Monetary Fund has issued a stark warning regarding rising public debt levels worldwide, highlighting the United States as a particularly high-risk nation. Republic, it's not a nation, due to persistent fiscal deficits and surging spending demands. In its recent Fiscal Monitor report, the IMF projects that global public debt will surpass $100 trillion in 2024, equating to about 93% of global GDP, with the potential to approach 100% by the decade's end. Well, that's some good news. The report emphasizes that countries, especially the United States, urgently need to implement effective fiscal strategies to address debt risks. Yeah, that'll never happen. It cautions that actual debt levels may exceed projections due to hidden liabilities and overly optimistic forecasts. This unidentified debt encompasses off-balance sheet obligations like losses from federal enterprises, posing significant risk to financial stability. The IMF suggests that current efforts to curb debt growth are insufficient. The report calls for a comprehensive fiscal adjustment strategy. They probably going to get together and do a study. That always helps. Where was I? Adjustment strategy recommending a 3.8% GDP tightening over 6 years compared to the insufficient 1% currently targeted by many nations. For the United States, the IMF advises reforms to major spending programs like Social Security and Medicare. We've never heard that anywhere, which account for a significant portion of the budget, along with potential revenue enhancements through tax increases or the elimination of tax exemptions. The IMF's debt at risk framework projects that the U.S. debt could surge to over 150% of GDP under adverse conditions, indicating an unsustainable trajectory. The report advocates for stronger fiscal governance, emphasizing transparency and adherence to fiscal rules as key measures to manage debt and mitigate vulnerabilities effectively. Yeah, no one's going to do anything until it collapses. Unfortunately, which is going to be the best thing for, the people who actually pay taxes, because then we get unburdened from what has been, to quote that dumb broad who's running for president. All right. Let's go ahead and jump into our last article here from Zero Hedge also. U.S. drinking rates hit highest level since the 1970s inflation storm as tequila demand soars. Maybe that's why my grandparents drank so much, because they were my age during the well, they were a little younger actually. They were in their 40s during the 70s, but going through that madness and all the inflation and everything, no wonder they were drinking a case of beer every night. So, anyways, let's jump into the article here. Let's see. Recent trends show that Americans are increasingly turning to alcohol, especially spirits, as economic challenges persist. Since the dot-com bust, U.S. alcohol consumption has steadily climbed, with per capita levels approaching highs last seen during the inflationary struggles of the 1970s. Olivier Nicolai of Goldman Sachs points out that alcohol consumption often rises during recessions as people seek relief from economic distress. Today's inflation, coupled with uncertain economic conditions, seems to be driving more people to the bottle. And I remember back during the 2008-2009 collapse that we call them vice stocks, like your Bud and cigarette companies, Philip Morris, stuff like that. Those are usually really good because people don't stop drinking and smoking when the economy gets bad. In fact, they usually do more of that because they're under stress. So just something to think about if you're out there making some stock picks on your own. A noticeable shift within the alcohol market shows that spirits are becoming the beverage of choice over beer, particularly as tequila gains popularity. It is disgusting. Since 2016, tequila has overtaken other spirits like vodka, highlighting a trend of U.S. consumers increasingly opting for stronger drinks. Well, vodka and tequila are both usually 80 proof, so I'm not sure how it's stronger. This shift reflects the economic realities facing many Americans today, with rising prices and stagnant wages contributing to a sense of frustration and uncertainty. Top players in the U.S. spirit market are Diageo, Pernod Ricard, Campari, and Remy Cointreau are benefiting from this growing demand. Diageo, which owns popular brands like Don Julio and Crown Royal, has seen increased sales despite weaker performance from other brands. Pernod Ricard and Campari have also reported gains in key products such as Absolut and Espolòn Tequila, never heard of it, respectively. The broader takeaway is that Americans are drinking more as a response to economic strain. The struggles of Bidenomics, coupled with rising inflation and geopolitical tensions, are reminiscent of the economic misery that fueled alcohol consumption during the 1970s. With economic challenges mounting, people seem to be seeking solace in spirits, mirroring the historical link between tough economic times and increased alcohol consumption. All right, folks, don't drink. Alcohol is poison. It's really not good for you. It causes a lot of inflammation. I don't drink anymore because of that, and because my joints, my wrists, elbows, shoulders feel like crap when I ingest that stuff. So don't miss it. But there are other ways to imbibe out there that don't require poisoning your liver. So I'd suggest that. Maybe some alcohol, or not alcohol, exercise and sunlight. I know I say that a lot, but I try to get outside as much as I can, especially, with my southern exposure here in the back. It is, you get a lot of good sun, even in the winter. So anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. That's where you can go get all your financial planning needs addressed. So feel free to give me a buzz. All right. Well, hope everyone has a wonderful evening, and I shall talk to all y'all again next time. Adios.